Ever hear someone say, the gross rent is $2,000, and wonder what that really means? Let's break it down the way I look at deals, super simple, no fluff. Gross rent is the total amount a tenant pays the landlord before any expenses, credits, or taxes are taken out. It's the sticker price. If rent is $2,000 a month, gross monthly rent is $2,000. Multiply by 12, gross annual rent is $24,000. That's it. No utilities, no maintenance, no property tax deductions, just the top line rent collected. Why do I care? Because gross rent is the starting point for every rental calculation. It's how I estimate what a property could bring in and whether it's even worth running deeper numbers. Let me show you. Example 1. A one-bed rents for $1,800. Tenant pays all utilities. Gross rent, $1,800 a month, $21,600 a year. Example 2. A two-bed rents for $2,100. Landlord offers 1 month free on a 12-month lease. Tenant pays $2,100 each paid month, but only pays 11 months, $23,100 yearly. Effective gross rent, $1,925 per month on average. Example 3. A duplex brings in $1,500 upstairs and $2,300 downstairs. Combined gross monthly rent, $2,800. Annual, $33,600. See the pattern? Gross rent is easy to calculate, but it doesn't tell the whole story. That's where comparing comes in. Gross rent versus net rent. Net rent is what you keep after expenses. Taxes, insurance, maintenance, property management, vacancy, repairs. Gross rent might look great, but if you spend half on costs, your net tells you the truth. Gross rent versus effective rent. Effective rent factors in concessions like 1 month free or discounts. Tenants care about effective rent. Landlords often advertise gross. I always do the math both ways. Gross rent versus GRM, the gross rent multiplier. GRM, style, purchase price. Gross annual rent. $360,000 purchase, $36,000 gross rent. GRM. 10. Lower GRM can mean better value, but it ignores expenses, so it's just a screen, not a decision. Gross rent versus rent to income. Tenants often aim for rent under 30% of income. Landlords use that to assess risk. High gross rent with weak tenant income can mean vacancy or defaults. Utilities and extras. Who pays water, trash, electricity, pet rent, parking. Those don't change gross rent unless listed as rent items in the lease. But they do change your net. Market differences. Urban Class A apartments. High gross rent with big concessions. Suburban rentals. Lower gross, steadier occupancy, lower turnover costs. So here's my quick workflow. Define the gross rent. Adjust for concessions to get effective gross. Estimate expenses to find net. Compare using GRM for a fast check, then cap rate for the real picture. Bottom line. Gross rent is your headline number. It's how I size up a deal in seconds. But the profit lives in the details. Effective rent, expenses, risk. Start with gross. Don't end there. Run the numbers, and let them tell you the story.